Kajaria Ceramics, with a mild degrowth seen in its top line and bottom line, the company has mentioned that the demand environment for tiles continues to remain sluggish. Let's discuss the quarter gone by with Mr. Ashok Kajaria, the CMD of the company, who's joining us right now on the show. Mr. Kajaria, thanks very much for taking out the time. It's a tough environment, and we're seeing that as a reflection in the numbers. Could you talk us through what were the key highlights of this quarter? I believe sales volumes also remained largely muted. You saw a reflection of the sluggish top line on the bottom line as well. Talk us through how things are likely to shape up going forward.
See, what we have done, first of all, the market was very tough. The banking, as we all know, is very, very tight. The banking, no money is being given in the market. But what we have done to make the path correct, we have not compromised on the working capital. That is a key factor we have been focused on. And secondly, we are trying to increase the spend on brand, because that what will ultimately help us, because as we go forward, markets improve, the branding will help us going forward. And we are very confident that going forward, from April onwards, things should be much better.
Okay. How much is the increment in your advertising and branding expenditure this quarter?
See, this year we will be roughly spending about 100 crores. But going forward, we are looking at how to increase it more and focus on certain regional areas where we feel more focus is required, like various states like Maharashtra, Tamil Nadu, Karnataka, where we want a stronger presence going forward. So we'll be spending much more than what we are doing now.
Sir, the expectation of a volume growth of 6% was what the street was pegging in. The volume growth has come in sub that. When do you see a pickup in the volume trajectory for yourself? Do you expect that also to take place in a quarter or 2 quarters?
When we say volume growth of 6%, around 6% for the year, that automatically, if you work out the numbers, it means about 10% plus in the fourth quarter. But going forward, we are looking at a much better scenario. Things are improving on the ground level. And I'm sure with the steps taken by government to step up the housing by infusing a fund of 25,000 crores for the uncompleted projects, improvement in banking, definitely future looks much, much more positive.
You're saying 10% in quarter 4 volume growth is something that's achievable for you, right?
Approximately around that, because that is how we'll reach a number of 6% annually, if you see that.
Sure, but that's the street expectation, not necessarily you'll clock it. So that's why I'm asking you whether that's a realistic estimate that the street is putting out for you.
Yeah, it's a realistic estimate. It's a realistic estimate.
Okay. What about margins, sir? Margins saw a bit of a contraction on a year-on-year basis. What impacted that? And then do you feel that you'll come back to levels of about, 15-16% in terms of margin performance?
Margin has been around 15 lower end of 15.12, something like that. But going forward, we are looking at 15 to 16, but closer to 16. Because the fortunate part is gas prices have been stable, and going forward it will further come down. Because it is linked, the long-term contract is linked to Brent, so it will further come down going forward. So we are looking at a scenario where the margins will be closer to 16.
Okay. Sir, the top line was subdued, and that's largely due to subdued volume growth, which we've already spoken about. But talk to us on realizations as well. I think they too have fallen. What were the realizations in the quarter gone by, and what's the outlook that you can share? Is the situation improving with regard to pricing in the current quarter?
See, pricing may not improve. The cost will come down. Pricing may not improve because there is too much competition as far as the pricing is concerned. So I won't say that I am looking at a scenario where pricing will go up, but definitely the cost will come down. Nothing is going up except the gas which have been, and gas, as I just said, has constant, and going forward it will come down. So the margins will be intact, but I don't see a scenario where prices per se will go up.
What were the realizations, sir, in the quarter gone by?
Pardon me?
What were the realizations in the quarter gone by?
I didn't get your point.
Okay. What I meant was
the quarter gone by, yes. The realization has come down by 2% in terms of revenue. and the volume growth has been 1%. If you look at the overall scenario, it is down by 1% correspondingly.
Okay. So there was an expectation when GST was getting implemented that organized players like you would garner more of market share. Could you just give us an idea from pre-GST era to now, what has been the market share gains for you?
See, if you look at the total industry size is about 28,000 crores, out of which domestic market is about 20,500 crores, and 7,500 crores was roughly the exports last year. Kajaria has done about 2,800 crores of tiles last year and 200 crores of faucets and sanitary ware. If you look at that number, our share in the entire industry in the domestic market has been close to 13.5%. And not only Kajaria, I think Somani, Kajaria, Asian, Granito, Johnson, we have all gotten market share from the unorganized players. And going forward in the next 2 to 3 years, I think their share will further go up as far as the organized sector goes.
And due to more compliance, you can correct me if I'm wrong, I think from April this year, there will be e-invoicing. As a result of that, do you expect more of market share to come to organized players like you? Absolutely correct. It has already started in a preliminary manner from 1st of February with companies with 100 crores and above. And from 1st of April, it will be mandatory to put that e-invoice right in the portal. Secondly, what they have also done correct, if you don't give the GST money, after 2 months, that's 60 days from the date, you don't get an e-way bill generated. So they are tightening up the norms, which will definitely help the organized players to grow and to take more market share. What about the liquidity pressure which the industry was already facing? You said working capital has been fine. What about the receivable days?
Working capital, Kajaria has not compromised, as you can see from the chart. And going further down, you will see that we will match the numbers from March 19th.
Okay, so that should be around 64, 65 days?
That is one area we are not compromising.
Okay, 64, 65 days, that's somewhere around...
yeah, it will be much lesser than that.
Oh, okay.
No, it will be much lesser than that in March 20.
What would it be then, sir?
Close to March 19.
Okay.
Whatever was in March 19, we'll match that.
I don't have the number with me, so if you could just give me the number, sir.
I don't have the numbers straight away with me, but definitely it was much lower. It was much lower.
Okay. Just last point. You've also declared an interim dividend of 3 rupees per share. Could you also just highlight what are the cash on the books currently?
What are the?
Free cash that you have on the books.
What's the question?
I've said that you've announced an interim dividend, sir.
We have a cash surplus of almost...
yeah, go ahead.
Yeah, we have a cash balance of almost 186 crores. 186 crores.
Okay.
Roughly.
All right. Any plans to redeploy that money?
Kajaria is a debt-free company with a cash balance of 186.
Okay. Any plans to deploy that money post-dividend?
It will only be used for our existing growth.
Okay. Yeah, that was my question.
No. Right now what we are doing is we are growing, and if we have to grow, we will use that money. But going forward, there will be much less of a capex. In the new environment, there will be much less capex in the coming years.
Okay, got that. Mr. Kajaria, thank you so much for joining and really appreciate you taking out the time. All right, that's the management at Kajaria Ceramics. So while this quarter seems to be a little bit of a damp squib, things should start picking up, primarily on the back of the 10% volumes that he's hoping to clock in Q4. Realizations may not pick up on the back of increase in price rises, but on the back of keeping costs under control. And no more major capex that the management is looking to make. They've got healthy cash on the books, so all that looks fine. As of now, the stock's not doing a whole lot much. 545 for Kajaria Ceramics.